Hi guys, welcome back. Today I'm going to be covering an additional company. I'm talking about Airbnb. Now with the recent announcement that they're looking to go public with the SEC, this has to be covered. Now they provided to the SEC over 500 pages providing a lot of information regarding their market size, their performance and everything. Now for most of you guys, you don't have all the time in the world to go with 500 pages to understand if might be a good investment or not. Now I went over it and I literally was able to find the most important information for you guys to understand everything that you need to understand about the business, the potential, the risk. So stay tuned and let's start. So we need to start from somewhere. Let's start from the beginning. So Airbnb was founded in 2008. It's an online community marketplace for people to list, discover and book accommodation. Now they recently also entered to a new market, which is experience. So I'm going to go back to it later on. Now the second thing you should probably know, in 2019 they had 54 million people booking on the platform for a total number of 327 million nights, which bring to a ratio of 6. For every person has an average of 6 nights that book with a platform. Now since they were founded, they had over 800 million people that use the platform to book an accommodation and also experience. This is quite substantial when you think about it. Now the elephant in the room needs to be addressed. I'm talking about market valuation. Airbnb had one of the craziest roller coasters when it comes to the market valuation. From 2014 being valued from $10 billion and then doubling the value within 1 year, then from $20 billion in 2016 being valued at $30 billion, and then 2019 being valued at $38 billion, and then 2020 came, and based on independent valuer of the company market size, they're talking about $18 billion. This is a very big drop in the market valuation of this company. Now they're planning on going public based on market valuation of $30 billion. Now the thing is, I don't feel so comfortable with this big crazy market valuation. We all know what happened in 2020, and going backward from 38 to $30 billion, I feel that I'm going back to the price of the company that was valued in 2016 at $13 billion. Why is the price $30 billion again? For me, it's a red flag. Now they want to raise it at $30 billion based on independent valuer. They're saying it should be between 18 to $21 billion. It's all depend on supply and demand. So if there are going to be a lot of people that be interested to purchase and take part of this IPO, the market size might get even to $30 billion. Now this is something you should definitely consider when you're thinking of participating in their IPO. Now another thing that I didn't mention, this whole market potential of short-term booking, it's valued at $1.2 trillion. So obviously if Airbnb gonna do good, there's a big potential that their market valuation and the market share will get bigger. Now saying that, until today Airbnb never ever made any profit. It just keep working on a loss, expansion and collecting debt. So this is, in my perspective, is not a good sign. Obviously, like most companies, initially you are collecting a lot of debt, you are expanding, so obviously we want to see a dramatic growth in revenue, and obviously we want to see some investment where you will say to yourself that the first year or 2 years we're going to be losing money, but eventually it should become and turn into a profitable business. Now saying that, you should also take into account they made a lot of changes in 2020, so they fired if I'm not mistaken, 25% of the workforce. Now, again, obviously they're trying to please their investor and their shareholder, but again, it's not a good sign to invest in a company that hire a lot of people and need to lay off 25% of the workforce. So obviously, please take that into consideration, that any business that were affected by the corona, that didn't grow during this period, will have some dramatic challenges to grow for the next few years. So investing in a company that their pricing of the market size of their company is not at the lowest might not be attractive. So if I'm going to be investing in any company that has been struggling for all this year to make a profit, if there was an epidemic like COVID-19, I'm expecting for the price valuation to go even lower, and this wasn't the case. So obviously they want to price this at a higher price, which is understandable. They need to please their investors. Whoever invests in the last round, if it was valued at $30 billion, no one wants to have your company that you invested valued at half the price. So this is also something to take into consideration. Now let's talk about competitors. Now you might think about Expedia, Booking.com, but for this specific segment, I actually just focus on Booking.com because it's been around for many years and we can actually learn many things about it. So I'm gonna provide a lot of insight in regards to the market size, the revenue, the income, the losses, just to understand if they're gonna be valued at a specific market size of $30 billion, what's supposed to be their income or the revenue in my perspective. So let's dig in. Alright, so what we're looking now is Airbnb total book night events rival. So we can see that Airbnb in Q1 2019 had a 91 million night book, and then we look at Expedia, which had 81 million night book. Now when we look at Booking.com, Booking.com had 217 million, more than double the amount of night compared to Airbnb. Okay, just remember, more than double. Now I took this screenshot from Airbnb just for you to understand what was the total revenue. So in 2019, Airbnb had a $4.8 billion in revenue, and they had a loss of over $674 million. Now if you look at 2017, 2018, it seemed that the year for Airbnb to become profitable was supposed to be 2019. Now obviously they have some different plans, strategic of expansion, branding and all the expenses. This is why we see this number, but I'm just saying that if you are going a pattern where you are slowly shrinking your losses, I'm not expecting to see from $17 million loss, $60 million loss to $674 million. That is a dramatic increase. It's insane. Now I'm looking now at Booking.com revenue in 2019, $4.8 billion. Now if we look at what happened in the first 9 months of the year in 2020 with the epidemic, Booking.com has a 30% drop compared to last year. So we're talking about a $2.5 billion in profit in revenue compared to our friend Airbnb that's still struggling to make a profit or to break even. This is obviously quite alarming for me. So then we look at the past few years. So look at 2017, 2018, 2019, Booking.com has a constant year increasing their annual revenue and also increasing their net income year by year. So this is obviously very comfortable. So it means that there was a potential for companies like Booking.com or Expedia or even Airbnb to make some money. But unfortunately, Airbnb decided to invest the money that they made for other purposes. To level the playing field in 2020 with COVID-19, I needed to test Airbnb and Booking.com Q1, how much money they lost. To my surprise, they almost lost the same amount of money. How does a company the size of Booking.com lose the same amount of money that Airbnb, or with their size, with their technology and all the strategy, almost lose the same amount of money? I'm talking about a difference of $3 million. That's the only difference. So they lost, Booking.com lost $699 million in Q1, and Airbnb lost $696 million. Now, this for me, it doesn't make sense. How such a big company are able to lose the same amount of money when they have different strategy, they have different way of doing business? It shouldn't be the same. I would expect Booking Group to lose way more, or I should expect Airbnb to lose way less. Regardless, one of them did a very good job in keeping their expenses or the loss very low, and another one, in my opinion, did a very bad job in managing the losses. It's up to you guys to decide, because it's very difficult answer for me to tell you guys, but this is really not a good sign. Two different companies, different size, shouldn't be losing the same amount of money. So it's either somebody did a very good job in managing the losses, or somebody did a very bad job in managing the losses. So obviously take that into consideration. I wanted to illustrate in this specific image to show that during the first Q1, Booking share price went down by almost 50%, and also their market cap went down by almost 50%. But if you look at today's market cap, it's literally almost regained what it have lost since the beginning of the year. Now, whenever you look at Airbnb market capitalization, it hasn't yet regained. So 2019, it was valued at $38 billion, and some independent analysts and valuers are saying 18 to $21 billion, and Airbnb are hoping that they're gonna raise more money via the IPO at a valuation price tag of $30 billion. Now, this is still not, I would like them to be valued at the same price, if not slightly lower from what they were, but not such a big difference. Now, in the report that they sent to the SEC, they actually made a very good argument. They're actually talking a lot about short-term, long-term, and also the experience. Based on their own research, they are valuing the experience market size of $1.4 trillion. Now, they're just entering this market, and I'm assuming that other competitors will also enter this market. Now, what they're actually doing is via Airbnb and this whole experience, they enable people, if it's a musician, if it's a chef. So for example, my girlfriend surprised me with a Michelin chef from New York, where he was basically cooking in his own home, and he sent us like the ingredients and the thing that we need prior to the session of cooking with him. So this was cool. So this obviously can be a potential, and obviously they were able to make some money from this offering and services that they're offering. But I'm guessing there'll be some more competition along the way. COVID-19 won't be with us all the time. Eventually people would like to do stuff face to face, or in a group, or in outdoor, not from Zoom, not from any other remote solution for sharing experience. So this is something that maybe Airbnb, they're able to really figure out how they can actually leverage, they can actually really win in the early stage this market share. But rest assured, the competitor are not gonna let Airbnb to just take another market share. So this is something for you to consider. So if I have to summarize how comfortable I feel with Airbnb, as someone that has user services, if it's their experience, the new experience offering that they'll offer, if it's as someone actually booked through the platform, if it's from a friend that are Airbnb hosts. So there's a lot of mixed information and mixed messages. I'll probably say that I wouldn't feel comfortable to invest in Airbnb as long as they're not able to reduce dramatically their losses and it's constantly shrinking, which wasn't the case for 2019. Now, you are investing in a company for two reasons. Reason number one, for your money to grow. Reason number two, so hopefully you're also going to be able to get dividend. Now, if they don't have any dividend program, and if the company is maybe, some people will say it's not very well managed, and it still take them more than 12 years to try to make a profit, there's probably some other company out there that don't need to try to make a profit, that has been dramatically making profit and are in the green, that might be a better investment for you guys. Now, please take that into consideration that I'm not a financial advisor. I've done a lot of research. It's for just educational purpose for you to have a better understanding of what to look and what not to look when you're considering investing in Airbnb. Now, if I haven't done all this research, I probably would have considered investing in Airbnb, but after doing all this in-depth research and looking at the numbers, I felt that there is more companies that are more suitable to invest for the long run. Now, I'm not saying that Airbnb cannot turn the page and make some money, but I wouldn't feel comfortable with the current market valuation to invest in Airbnb. So I hope that was clear for you guys, and until next time, bye bye.